9 trillion yen, 58 billion US dollars. That is Japan's defense budget for fiscal 2026, a record for the 12th consecutive year, and a number that hits the 2% of GDP target 2 full years ahead of schedule. For a country whose post-war constitution literally renounces war, Japan just became the world's third largest defense spender, after the United States and China. And I think the technology implications of this shift are being dramatically underappreciated outside of Asia.
That is a staggering number. 9 trillion yen is more than the entire GDP of many countries. How did Japan get here so fast?
3 factors converged. First, geopolitical pressure. China's military exercises around Taiwan in late 2025 and the PLA's expanding naval presence in the East China Sea fundamentally changed the threat assessment in Tokyo. Second, Prime Minister Sanaya Takaichi came into office with a more assertive defense posture than her predecessors. She pledged to hit the 2% target by March 2026, rather than the original 2027 deadline. And third, the US under Trump has been pushing allies to spend more on their own defense. Japan had both the internal motivation and the external pressure.
Break down the budget for me. Where is the money actually going?
The allocations tell the story. Over 970 billion yen, that is $6.2 billion, goes to standoff missile capability. This includes 177 billion yen for domestically developed Type 12 surface-to-ship missiles, with a range of approximately 1,000 kilometers. There is a separate allocation of about $192 million for Japan's first scramjet-powered hypersonic weapon that can fly at over Mach 5. On the unmanned system side, 100 billion yen, roughly $640 million, is allocated to the SHIELD program, which deploys a fleet of autonomous drones in the air, on the sea surface, and underwater for coastal defense by fiscal 2027.
And the GCAP fighter jet program?
The Global Combat Air Program is Japan's most expensive and ambitious defense project. A trilateral next-generation fighter developed jointly with the United Kingdom and Italy, targeting deployment in 2035. More than 160 billion yen, over $1 billion, is allocated for GCAP development this year. The program is managed through a joint venture called Edgewing, owned by BAE Systems, Leonardo, and Japan Aircraft Industrial Enhancement Company, which is a Mitsubishi Heavy Industries subsidiary. Here is the critical recent development. On March 11th, Defense News reported that Japan is fast-tracking export rule changes specifically for GCAP, potentially allowing fighter jet exports to countries with signed defense partnership agreements, including Germany, India, and the United States. This is the first time in post-war history that Japan has authorized the export of domestically produced fighter aircraft.
That is a historic shift. Japan exporting fighter jets would have been unthinkable even 5 years ago.
And it tells you how fundamentally the security calculus has changed. But here's what I think is the more interesting story for our listeners. The defense spending surge is creating an entirely new industrial policy intersection between semiconductor manufacturing, AI, drone supply chains, and Japan's legacy defense contractors. Companies like Mitsubishi Heavy Industries, NEC, IHI, Kawasaki Heavy Industries, and Fujitsu are being asked to scale capabilities they have not invested in for decades. And the investment numbers are starting to reflect that.
What kind of money are these companies committing?
Mitsubishi Heavy Industries, Japan's largest defense contractor, is targeting 1 trillion yen in defense revenue, roughly $6.89 billion, by the end of fiscal 2026. That is a doubling of their defense revenue in roughly 3 years. In April 2025, MHI won a $216 million contract to develop advanced long-range precision-guided missiles. NEC is targeting 400 billion yen, $2.6 billion, in its aerospace, space, and defense unit by March 2026, representing over 60% revenue growth. They hired 750 people last year and plan to add another 450 by March. Fujitsu announced on March 10th, just 2 weeks ago, the launch of its Accelerator Program for Defense Tech, an open innovation program developed with Japan's Acquisition, Technology, and Logistics Agency, known as ATLA. This is Japan's first major defense tech accelerator.
So legacy tech companies are pivoting hard into defense. Let's get into the geopolitical reaction to all this. China has not taken Japan's defense buildup quietly. What has the response been?
On February 24th, China's Ministry of Commerce banned the export of dual-use items, goods with both civilian and military applications, to 20 Japanese entities and placed another 20 on a watch list. Bloomberg reported on the same day that the blacklist includes multiple subsidiaries of Mitsubishi Heavy Industries involved in shipbuilding and aircraft engines, several IHI Corporation companies, Kawasaki Heavy Industries, Fujitsu, Japan's National Defense Academy, and even JAXA, Japan's space agency. That is 40 entities total. The stated reason was Japan's public statements regarding Taiwan, which Beijing said implied the possibility of military involvement in the Taiwan Strait.
What are the practical implications of that ban?
The immediate impact hits machine tools, electronic components, and the supply chain infrastructure that Japanese defense firms had been sourcing from China, but the bigger vulnerability is rare earths. According to trade data, in 2024, Japan imported over 5.2 million kilograms of rare earth metals from China, representing 63% of its total rare earth imports. For the heavy rare earths that matter most for defense, dysprosium and terbium, which go into the high-performance magnets used in missile guidance systems, radar, and jet engines, the dependency is close to 100%.
So China has leverage over the very defense buildup that Japan is conducting to deter China.
That is exactly the paradox. The Foundation for Defensive Democracies published an analysis in January, noting that China reportedly blocked rare earth exports to Japan, specifically targeting defense supply chains. Defense News reported on January 7th that Japanese officials publicly protested, calling the restrictions potentially crippling, and the economic modeling is sobering. Analysts estimate that if rare earth restrictions last 3 months, Japan could incur losses of approximately 660 billion yen, $4.2 billion, pulling down nominal and real GDP by an annualized 0.11%. If it lasts a full year, those losses could reach 2.6 trillion yen, denting GDP by 0.43%.
So China has leverage over the very defense buildup that Japan is conducting to deter China.
That is exactly the paradox. The Foundation for Defensive Democracies published an analysis in January, noting that China reportedly blocked rare earth exports to Japan, specifically targeting defense supply chains. Defense News reported on January 7th that Japanese officials publicly protested, calling the restrictions potentially crippling, and the economic modeling is sobering. Analysts estimate that if rare earth restrictions last 3 months, Japan could incur losses of approximately 660 billion yen, $4.2 billion, pulling down nominal and real GDP by an annualized 0.11%. If it lasts a full year, those losses could reach 2.6 trillion yen, denting GDP by 0.43%.
Is Japan doing anything to reduce that dependency?
Several things. In January 2026, Japan began deep-sea rare earth mining tests in the Pacific Ocean near Minamotorishima Island, targeting deposits at roughly 6,000 meters depth. Japan has also maintained its strategic partnership with Lynas Rare Earths in Australia. Tokyo invested $250 million into Lynas back in 2011, and over the last 15 years, Lynas has expanded from a single mine to processing, refining, and magnet manufacturing facilities in Malaysia and the United States. But here's the honest assessment. Even with Lynas and deep-sea mining, replacing 63% of rare earth supply and near total heavy rare earth dependency takes years, not months. The vulnerability is structural and current.
Let's talk about the semiconductor intersection, because you mentioned this is creating a new industrial policy dynamic.
This is where it gets really interesting. Japan has designated 17 strategic sectors for state-led investment, and defense technology overlaps with several of them. AI, semiconductors, digital infrastructure, and cybersecurity are all on the list. The defense budget is not operating in isolation. It is running in parallel with Japan's $65 billion semiconductor renaissance program that we covered a few episodes ago. Rapidus, TSMC Kumamoto, Tokyo Electron, Shinetsu Chemical. The convergence is this. Next-generation defense systems, hypersonic missiles, autonomous drones, the GCAP fighter, cyber warfare capabilities, all require advanced semiconductor manufacturing, AI processing, and secure supply chains. Japan is building both simultaneously, and the two programs share overlapping supply chain requirements and workforce needs.
So the defense budget is effectively creating additional demand for the semiconductor ecosystem Japan is already building.
Precisely. AITLA, Japan's defense procurement agency, is specifically working with defense tech startups and established contractors on AI-powered autonomous systems. The 4.8 billion yen allocated for autonomous drone R&D for GCAP involves AI-driven situational awareness and autonomous flight decision-making. This is cutting-edge AI systems work that requires the kind of computing infrastructure that Japan's semiconductor investments are designed to support. The defense and semiconductor strategies are becoming mutually reinforcing.
What about the defense stocks? Because if you're an investor watching this space, the market reaction must be significant.
Mitsubishi Heavy Industries stock is trading at around 5,000 yen as of mid-March. Its 52-week range is from 2,055 yen to 5,208 yen, so it's near the upper end of its range, almost having doubled from its lows. IHI is at 3,734 yen, with a 52-week range from about 1,200 to 4,700 yen. These stocks have been among the best performers on the Tokyo Stock Exchange over the past 2 years. The market is pricing in the structural increase in defense spending, but the question I keep asking is whether the market has fully priced in the execution risk.
Contrarian corner. The consensus view seems to be Japan's defense transformation is real, the money is flowing, the companies are scaling, and this creates a new era for Japan's industrial base. What is the skeptical read?
The contrarian position starts with a question that almost nobody in the bullish analysis is asking. Can Japan's defense industrial base actually execute at this scale? Because here's the reality. Japan has not built a major indigenous weapon system from scratch and deployed it at scale since the F-2 fighter in the 1990s, which was itself heavily based on the American F-16. The defense industrial workforce has been atrophying for decades. Mitsubishi Heavy Industries, Kawasaki, and IHI have maintained defense divisions, but those divisions have been operating at modest scale with limited production runs, primarily producing under U.S. license agreements.
So the money is there, but the institutional knowledge and production capacity may not be.
That is the gap. When Mitsubishi Heavy Industries says it wants to double defense revenue to 1 trillion yen, that requires not just winning contracts, but hiring thousands of specialized engineers, building new production lines, establishing quality control systems for weapons-grade manufacturing, and managing supply chains for components that have very different reliability requirements than civilian products. NEC adding 450 people to its defense unit is a start, but aerospace and defense engineering expertise takes years to develop. You cannot simply redirect software engineers from NEC's IT services division into missile guidance system development.
The GCAP program is the biggest test case for this, right?
GCAP is the single most important execution test. It is a trilateral program with the UK and Italy, managed through the Edgewing joint venture. There have already been reports of contract delays between the three governments and the industry consortium. The 2035 deployment target is ambitious, even for countries with deep defense industrial experience. Japan has never co-developed a fighter aircraft at this level of international integration. The organizational complexity, 3 governments, 3 prime contractors, different regulatory frameworks, different classification systems for sensitive technology is enormous, and Defense News reported just 2 weeks ago that Japan is having to fast-track export rule changes because its existing legal framework was not designed to handle this kind of international defense collaboration.
The export rule issue is fascinating because it highlights a deeper structural problem.
Article 9 of the Japanese Constitution renounces war and the threat or use of force as a means of settling international disputes. Japan's post-war legal and regulatory framework was built on the assumption that Japan would not be a major defense exporter or manufacturer of offensive weapons. The current government is moving rapidly to change the rules, but changing laws and regulations is the easy part. Changing the institutional culture, procurement processes, industrial workforce capabilities, and risk tolerance that were shaped by 70 years of constitutional pacifism, that takes a generation.
What about the rare earth vulnerability? Because that seems like it could be an immediate constraint, not a long-term one.
This is the part of the bull case that troubles me most. Japan is planning a defense buildup that requires advanced magnets, specialized alloys, and electronic components that depend on Chinese rare earth supply. China has already demonstrated willingness to weaponize that supply chain. The February sanctions on 40 Japanese entities were a clear signal. And Japan's alternatives are either very early stage, the deep-sea mining near Mina no Torishima is a test program, not commercial production, or geographically distant like the Linus partnership in Australia and Malaysia. The timelines do not match. Japan needs defense systems deployed in the next 3 to 5 years, but alternative rare earth supply chains are 5 to 10 years from matching the volume and processing capability that China currently provides.
So the contrarian view is the budget is real, but the execution capability, the supply chain security, and the institutional transformation needed to actually deliver on these programs are all uncertain.
And here's the thing that makes this genuinely different from, say, South Korea's defense export success story. South Korea spent 40 years systematically building Hanwha, Korea Aerospace Industries, Hyundai Rotem, and LIG Next One into globally competitive defense manufacturers. They had a continuous existential North Korean threat that kept political will consistent, a mandatory military service system that created a steady pipeline of personnel familiar with defense requirements, and a culture of industrial execution honed by the Chaebol system. Japan has a much larger economy and potentially larger budget, but it is starting this transformation with a fundamentally different institutional base. The question is whether money alone can compress a 40-year industrial development cycle into 5 years.
The counter-argument would be that Japan already has world-class manufacturing capability in adjacent sectors, automotive, robotics, precision machinery. Can those capabilities transfer?
Some can, and that is genuinely the strongest part of the bull case. Toyota's production system, Fanuc's robotics expertise, Japan's machine tool industry, these are capabilities that have defense applications. The autonomous drone programs are a natural extension of Japan's robotics strength, but the transfer is not automatic. Defense manufacturing requires specific certifications, security clearances, and quality standards that differ from commercial manufacturing. And the workforce willing to work in defense is a subset of the total engineering talent pool, particularly in a country where defense work still carries social stigma in some circles. Let's talk about what investors should actually be tracking.
Action items. What should investors and business operators track here?
3 action items. First, track GCAP program milestones as the most important signal of whether Japan's defense industrial transformation is real or aspirational. The Edgewing joint venture between BAE Systems, Leonardo, and Mitsubishi Heavy Industries subsidiary needs to finalize its development contracts and begin preliminary design review in 2026. If there are further delays beyond what has already been reported, that is a signal that the trilateral collaboration model is struggling with Japan's regulatory and institutional constraints. Watch for quarterly updates from Mitsubishi Heavy Industries on GCAP progress, and also monitor whether the export rule fast-tracking announced in March actually passes through Parliament. If Japan cannot export the fighter it is co-developing, the program economics do not work for any of the 3 partners.
Second action item?
Watch the rare earth supply chain diversification timeline versus the defense procurement timeline. These 2 clocks are running at very different speeds. Japan's defense programs need components now through 2030. The alternative rare earth sources, deep-sea mining near Minamoto-Teshima Island, the Linus Partnership expansion, potential new sources from Canada and Greenland, are on 5 to 10-year timescales. If China maintains or escalates its dual-use export restrictions on the 40 sanctioned Japanese entities, the immediate question is whether Japan has sufficient strategic stockpiles and alternative sources to continue defense production without disruption. The Ministry of Economy, Trade and Industry publishes periodic updates on critical mineral stockpile levels. Those reports become much more important now.
And the third?
Monitor the Fujitsu Defense Tech Accelerator and the broader defense startup ecosystem as an indicator of whether Japan can attract the kind of innovation talent that modern defense requires. Fujitsu launched this program with ATLA on March 10th. It is the first major corporate defense tech accelerator in Japan. The United States has a thriving defense tech startup ecosystem, Anduril, Shield AI, and others, and Anduril is reportedly establishing a more visible presence in Japan. South Korea has Hanwha actively investing and partnering with U.S. defense tech startups. The question for Japan is whether its defense spending surge can generate a comparable innovation ecosystem or whether the money flows exclusively to the legacy contractors, Mitsubishi, Kawasaki, IHI, NEC, who have the relationships but may not have the agility. Track the number of defense tech startups funded, the size of Atlas innovation budget, and whether any Japanese defense startups reach Series A or beyond in 2026.
The 3 signals are GCAP program execution as a litmus test for Japan's defense industrial capability, the rare earth supply timeline mismatch as a near-term vulnerability that could constrain everything else, and the defense startup ecosystem as an indicator of whether innovation follows the money.
And taken together, these 3 signals tell you whether Japan's $58 billion defense transformation is building a genuine military-industrial complex or whether it is a budget line item that the existing institutional base cannot fully absorb. The money is historically unprecedented for Japan. Whether the industrial execution matches the political ambition is the open question that the next 12 to 18 months will begin to answer.
I keep thinking about the China sanctions angle, because Beijing sanctioning 40 Japanese defense entities is not just an economic measure, it is a strategic test. China is essentially asking, does Japan have the supply chain resilience to sustain a defense buildup that is explicitly aimed at deterring China? And right now, the honest answer is uncertain.
That is the core tension of this entire story. Japan is building a defense capability specifically because of perceived Chinese military threats. China is using economic leverage to constrain that defense capability, and the outcome depends on whether Japan can decouple its defense supply chains from China faster than China can constrain them. That is a race with enormous geopolitical consequences, and it is happening in real time.
And if you want the full written breakdown with all the budget numbers, the rare earth data, and the defense contractor analysis, it is in today's newsletter at asiatechmacro.substack.com.
In our next episode, we are looking at the Grab-Goto merger saga in Southeast Asia, specifically why the largest proposed tech merger in the region's history keeps stalling, what Telkomsel's involvement means, and whether Prabowo's Dandantara Sovereign Wealth Fund is about to insert itself as a kingmaker in Indonesia's digital economy. A lot of moving parts and a lot of money on the table.
That sounds like a messy one.
The best episodes always are. Stay data-driven. Bye.